Hello everyone, and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec, on Wednesday the 18th of September. Now, we've got a fairly consolidation look to markets today. Nothing too significant in terms of direction. We do have the Federal Reserve meeting tonight, and it is interesting that there is a bit of dollar strength that is starting to come back into markets. You can see that across the board, really. Interestingly enough, sterling is again a bit of a flyer on the Brexit news flow, and subsequently we're seeing sterling a little bit lower today. But generally speaking, I think it's more of a dollar play today, where the dollar has started to regain some of the strength that it had. We've got the Treasury yields, which has just started to edge back lower again in front of this U.S. monetary policy decision, and that is starting to help to reflect this sort of help for safe havens that we have in markets at the moment. And you've seen the oil price, which spiked back lower again, but it's sort of stabilized a little bit, not really going too much lower. But it is all coming ahead of this Fed meeting tonight, where the Fed is expected to cut rates, for its monetary policy by 25 basis points. Let me show you the consensus for tonight, where we're looking for a 25 basis point rate cut. However, that's not going to be the whole story, because the market is well, it's basically pulled back on the prospect of two rate cuts, or 50 basis point rate cut just a few weeks ago. Obviously, with Treasury yields which have climbed so significantly in recent days. In the last couple of weeks, we've seen that priced out. But certainly the Fed is still expected to cut by 25 basis points, and how the Fed then projects itself in terms of forward guidance through the FOMC statement, but also the dot plots, will be very interesting indeed tonight to see how the prospects of a further rate cut for December come through. At the moment, it's sort of 1.5 rate cuts for the rest of this year, so it needs to probably guide a little bit further for December to be priced in. But it'll be interesting to see how it sort of goes for the trade dispute, which currently is sort of on a bit of an upswing in terms of positivity, but ultimately it seems to continue to be in this cycle of hope, followed by disappointment, and that's still likely to be the playbook there. Okay, so we do have the dollar, which has gained a bit of ground today, pulled euro back a bit. Euro had a good rebound yesterday, but again pulling back. It is interesting that across the board, and also higher risk asset plays, such as the Aussie and the Kiwi, are also struggling today. And the yen, not so bad, but yen is still a little bit weaker. Gold a shade lower, but you can see that silver is weaker, as that risk aversion seems to be creeping a little bit back in. But yeah, that's for the rest of the day. So in terms of this morning, we do have the UK inflation data. UK inflation at 9:30, and it's just coming out actually, and we've got the inflation that has disappointed pretty significantly, and that has helped to be a drag on sterling. Certainly, that core CPI at 1.5%, that's a real disappointment to the downside. So inflation really is falling away, and headline as well, 1.7%. So that's really is hitting sterling this morning, playing into that decline in sterling that we've got already. Okay, so what about our chart today? Well, we're looking at Euro Swissy today. Now, Euro Swissy has had an improvement in sentiment. We've seen the euro, which has really started to perform much better. And yesterday's candlestick really was a big, strong bull candle, which really did then clear this resistance band. You've got the 109.30 level of resistance that basically produced a base pattern, a mini base pattern that actually implies around about 120 pips or so of recovery. So that's around 110.50. that upside recovery has really gained traction through the 109.60 level, which has been the next basis of resistance. This old pivot, which became a pivot resistance throughout last week, but breaking decisively through that, that means that the next barrier overhead is now 110.55. So up around that implied target area, and we've got the improvement that we can see through the momentum indicators. RSI around 60 was at 4-month highs. MACD lines accelerating higher, again 4-month highs, as are the stochastics. So really strengthening momentum indicators, breaking higher through the price to multi-week highs, completing and confirming that base pattern, and the next resistance is up around the target level. So we're looking to buy this into weakness as the Euro Swissy continues to pull higher, and I think there is signs of further strength in due course, and I think that that continues to show through where Euro Swissy is just holding ground, a little bit edging a shade lower, but to be honest, I think any weakness back towards 109.60 to 109.30 is now a chance to buy Euro Swissy. So with that in mind, I wish you good luck in your trading today. Click here to go to our YouTube videos on analysis videos on YouTube, and also go to our website where you can sign up for our webinars. Thank you.